super excited to kick this month off of financial wellness. We're going to talk about a lot of different things, and our focus today is kind of pinning it back to the pandemic and how that's changed a lot of our finances personally or professionally, and kind of hitting on certain things. If you have any questions, please feel free to raise your hand, shout it out. This is going to be kind of like an open dialogue panel, which will be really fun. So kicking it off, Kristin helped me with these questions. Thank the Lord.
Oh, good.
So my first, sure. My first question, and I want all of you to kind of hit on it because it's going to be different for all of you. How has the pandemic changed how clients talk about their finances, or how has the pandemic changed the way that they talk about their future? Molly, yeah.
So some clients of mine, I thought it was interesting, realized that maybe their overhead is really stressing them out. And I think that some of them went into little niches and maybe stopped expanding in the way that they thought they had to, and found a way to expand without having to use so much of it. And I think it was maybe just that I've been running so hard that it's okay to maybe slow it down a little bit, and maybe the employees' costs from an employment standpoint aren't as important as something on the other side. And I think that was interesting to me to see just the pivoting of business.
Sure. I'll say the personal financial side of that, that was a little bit more for business owners. And I feel like pandemic gave everyone a chance to decide, this is what I want to be when I grow up. And so I feel like a lot of my clients maybe had some clarity. Maybe people who were, I don't know what I'm saving for, I don't really know when I'll retire, or I don't know what retirement looks like. They got a little bit more clarity. So I've had a lot of clients who are changing jobs, or who are just coming back saying, I'm not changing jobs, but I know that it's going to end at this time. And so a lot of people have just gotten a little bit more precise, which I love problem solving. So it's made my job more fun and created a lot more opportunity. And it's funny because I feel like the pandemic could be scary, but no, I feel like once we got through the crazy part of last year, this year has just been about opportunity. It's not like exciting conversations of, okay, what if I go part-time, or what if I lighten my load? What does that look like if I downsize? Like, what does that look like? So that's it.
Yeah. I totally agree. In my world, my clients, I have seen them moving a lot, moving out of the office into a new home, perhaps, or their second home, perhaps, or sharing a lot more, about, ride sharing, Ubers and Grubhub and delivery, and considering new options, and moving into the virtual world more, and therefore all these moves and renovations and buying furniture, things like that mean changes needed to one's homeowners or renters or condo policies. And of course the sharing, if you're driving for Uber in your personal auto, there's big exposures there for you that you may not be aware of. If you're putting your second home on Airbnb, you've got something you need to talk to your insurance agent about there. Or conversely, if you're renting an Airbnb, you need to think about, are you exposed? There's now even there's some poolsy website or something where people are literally sharing their backyard pools.
I heard that.
Yeah.
Yeah.
So think of the additional exposure there.
Yeah. I really like policy there.
Oh,
Right.
yeah.
I feel like my computer thinks I never thought about this side of it.
Yeah. And then with the increased people working from home and using their own devices more than those that they may have been accustomed to using in their protected office environments or things, big exposure in cybercrime, and that's something that we're seeing a lot of activity in from my side of things. Yeah.
branches, there was a run for everybody trying to get notaries for getting their wills together and
Oh,
all that. That was
yeah.
a big thing that's kind of died down a little bit, but where everyone just wants to make sure that all the dots are connected in case something does happen. Right. So,
Yeah.
Right. And I feel like personally, when everything started, I was like, oh my gosh, I need to save everything. I can't spend a penny. Were any of your clients feeling the same way, or were they kind of like, okay, what's the best way to kind of keep things normalized? Do you have any?
those that had
Common
lines of
questions.
credit in place.
Yeah.
Were, feeling like they could handle weather the storm better. I think that would be the one message I would say for this is get a line of credit. I like lines of credit to be used for a business standpoint for growing your business, obviously, or for cash flow deficiencies. But knowing you have a line of credit in place, you don't have to use it. And I think that there was, pre-pandemic, there was a government shutdown. A lot of our not-for-profits, usually were having in reserves. Didn't really need a line of credit. They had hard struggle to get it. So I think it's having the credit in place before you need it.
Yeah.
Is really important because you don't have, I think lines of credit people they have to use, and you really don't. They're not like a home equity line of credit. It's just there if you need it. So my one message, I don't know if that was a detour.
No, I love it.
No, I think that's great. And I do talk to back to how I use these individuals. For my clients, I do talk to my clients about, if you have my business owner clients, if you bank with someone but you don't truly have a relationship, you might want to consider finding a place for your relationship for things just like that. And a line of credit, like any other piece of protection, you don't want to try and get it when you need it. Like that's not how that works when you're like strapped for cash or to be like no. And so no, I talked to business owners about that, and then from a personal finance standpoint, I actually always talk to my clients about having those layers of access. So you have your emergency fund, that's your first line of defense if you need money. And then hopefully you have some type of investment account that's still accessible. I think a lot of people think investments only means retirement accounts, which are not accessible, especially if you're under 50 and a half. So that's not the case. So we build these layers. I say that to say, when it first happened, I did not get a lot of, I don't have any cash because it's like, we already talked about this. Like
You set the stage.
Yes,
right?
it's like you have set the stage. That moment has come, and you're gonna be good. And honestly, it's really a relief for me as well because I've been in it 10 years. I entered business after 2008, so it's a relief for me as well. That's like, okay, like everything we said is working and being put in place. So I did not get that. With that said, you do always just have to. What we had to discuss was reevaluating risk, because also when everything's good, everyone's like, I want to be in the stock market too. And so those were a lot of discussions we had was, okay, well, this is actually a really good time. Like, how did that feel? Because if it didn't feel so great, then we maybe actually need to maybe like scale you back. And so those were actually some of the discussions we had.
Yeah. And how does that conversation kind of start? And how do you take them through that discussion? I'm curious.
Yeah. So when everyone went home in March 2020, the market went down in March 2020. So it was damage control every day, a lot of wine. And so that discussion started by just there were individuals who I knew was like, I know their personality, I need to reach out to them. But then I was also sending out mass communications, and I kind of did it in groupings. Like if you were younger and your most aggressive stuff is retirement, you're just kind of like, I will get to you last, and we're just gonna ride this out. Right. And then that middle tier where retirement is maybe in the forefront. Again, things had been good. So the discussion was just, how does that feel now? We still have time. I don't feel like this is the time to change and get out. But as this starts to come back up, this is going to create some opportunity. Like, I don't want you to ever feel uncomfortable. So, and people are receptive to like, help me help you conversation. So that's how it was. And that was my March through May. Like March through May is a blur because I was just doing that every day. And then now that we have rebounded, that's been there's crazy things right now.
Yeah.
Timestamp where we are in the market. But beginning of this year with that rebound, that was another good conversation, another good round up. Again, so how are you? That plan works. Do you need to replenish cash and do? I hope that.
Yeah, yeah, and something I didn't realize until just being in the workforce and learning more is you do have to trust who you give your money to. I mean, you can't just hand it out to anyone. You wouldn't just walk up to a stranger and be like, here's all my money, put it in savings. And it does make a huge difference to have those relationships in any aspect of where you're putting your money. So I think that's super important.
I was there. One thing I want to say real quick about that is that's really important. Like as women, I think you're gonna ask your friend where do you get your nails done, where do you get your hair done. Like ask who their advisor is. I think a lot of people think this is who I'm going to, and I just have to listen to them. But it is another relationship, and you really should feel like that person respects you and doesn't talk down to you and trust you. I feel like I see more often that people don't realize that, and they're in a relationship that they don't even feel great about, and you don't need to do that.
Can I chime in really quick on that? Because I went through 2008 and I went through this.
Yeah.
And I could tell you I had a different advisor in 2008. And that made me figure out, like, to your point, who was reaching out to me? Because we were left high and dry. And we had a good relationship prior to that. But, you know, the proof is in the pudding when it gets hot. And then my advisor now, very different. Very different. So if you guys, if this has been your first rodeo, pause and think, who was there to support you? Your banker, you know, your financial advisor. And if they weren't, might be a sign.
You know, like picking up a cell phone, knowing that person that really in a crisis, you know, that they'll pick up their cell phone. That's a pretty good sign.
Yeah.
And I think that's what I found is people, you know, it was shocking to me. I always knew that Enterprise had an elevated service commitment to our clients. But I think when PPP was so crazy and I was getting calls, you know, at 8:30 at night from some business that I've never met before because, you know, they can't figure out how to fill out the application. So many, or that they just want to know where they're in the queue at Bank of America. Made me realize how powerful that is. That just for them to hear my voice, that they think that somebody's working on it. You know, I never felt like I never thought banking was like kind of like a doctor, but at that point, I feel like a lot of this is in my hands right now. And I think that is important. And money, you know, it's very important if you're worried you're not going to pay your employees. So,
Same in my world, kind of. I don't know if you all know. I'm sure you do, but there's all kinds of insurance companies operating. Many of them are called with what we call, I'm an independent agent, so I represent various insurance companies and fit our clients into their appetites, mix and match them, and develop programs that are specific to my families. But there are companies, you know them all. You know, you got USAA, you got Geico and Progressive and these names, Liberty Mutual, that the public can access directly, not through an agent. And so often those companies, they offer, you know, cheap insurance, but you don't get any advice. You're just dialing 1-800 and you're talking to whoever happens to pick up. It doesn't cost anymore to use an independent advisor who will be with you through your lifetime and your careers and your changes, and who is always going to be on the end of that cell phone call. So, you know, I feel that what we have to offer people in these crazy times is personal attention and advice, not just the cheapest coverage.
And this kind of leads me into my next question, Kristin. You hit on just being women in general and needing a little bit more support because it's not always of access to us. So I kind of want you all to speak on, although many women are running their own family households and making most of the day-to-day purchases and budgeting decisions, we often still feel uncomfortable discussing financial matters, even with their financial advisors. What do you attribute that to?
You can go.
I'm
sorry.
Their insurance advisors.
Oh gosh, I don't know what I attribute to, like stereotypes. I think just stereotypes. When I say stereotypes, so let me back up a little bit. My degree is in mathematics, and I mention that because I've just always been in a world where people are constantly like, maybe you're not good at that. And I think it's very easy that when people are saying like, women don't invest, women are scared of this, women aren't good at math, that you're just like, I guess I'm not. Like you just kind of accept that narrative for yourself. And so I think it's just a long line of that. But as you said, then when you talk to, we're talking about women's business, so when you're talking to a woman, and then you get them to realize, like, well, you are doing the finances because you're talking about the budget and you're grocery shopping, you know what's coming in and going out, or the amount of people who are like, I don't invest, and I'm like, you have a 401k, like then you are investing. And so I think having more conversations and being comfortable saying, I don't know, so I got help will help that. And I also was reading something about even the myth that women are more safe investors is not even, like that myth is even flawed, because I read something about how they even acquired the statistic. It's like, well, you're actually looking at just this specific sect of people, and because they don't have the highest return, that doesn't mean they're not taking risks. That means actually they're maybe being a smarter investor, because maybe they're choosing this middle of the road thing that's not as volatile. And so I think that's where it comes from. But I definitely think that we're working to change that narrative by having conversations and doing things like this.
I think it's perfectionism too. There's one right way to manage your finances, but I think what happens, and I don't know this from actual experience, but just from I know this from watching, but not necessarily people saying this to me. But I've always thought to myself, well, since it is a little bit of a perfectionism, and a lot of women, that's a lot of issues with perfectionism, that they choose to just not be involved at all. And so just a little bit of learning a little bit more about what you can do can change your financial future. And I think it's starting from maybe just saying, oh, I'm going to just look at my bank statements, or I'm going to pay down that credit card. And it doesn't have to be, you know, you don't have to know everything
You have to be
able to be able to be in control of your finances. And I think, and so then there's a blind eye that's continued to be turned, and then things start to become a little bit of a mess. So I think it's just taking those small steps and saying, hey, you know, I want to make sure I'm on that account, I'm checking it every month. And I want to, and I think then you start getting kind of that little power to say, oh, this isn't that complicated. Okay, I get it. If I use a 0% credit card versus this card, I'm not paying this interest. Okay. And I think it's just cash flow. I think it's something that is really not that complicated, but people don't want to wrap their brains around it. It's not necessarily fun. But understanding just cash flow can change your world from huge point. Just understanding when, okay, that car is paid off and I have this money coming in. And I think that schools, I don't think, do a very good job of explaining those basics.
No.
It's just, you know, it's just, but I think it's just taking little steps really change someone's personal plan. You know,
I'll admit I didn't know a credit card had interest when I got one.
well,
And I was just paying the minimum. I'm like, why is it not going down? What is happening?
It's awful. They say that you pay.
I'm like, what the heck?
And it's awful that that's not shared more. But I also said, you know, you don't like to say this as a banker because there are so many different levels of people understanding finances. But 0% credit cards they're amazing if they're used appropriately.
Right.
So credit cards aren't bad.
Yeah.
But it's understanding what your payment is and not getting into trouble with it. So because 0% credit cards are like a free line of credit. Right?
What do you mean by that exactly? Do I need?
Well, I would say
Talk to your financial advisor.
Okay.
I'll reach out to you all.
if you feel that you're in control of your spending and let's say you're making I think that I come from the old school line of thought that if you can't pay for it, don't buy it. But I think that having a 0% credit card, I remember when the pandemic hit, I had my line of credit in place and things like that, my home equity. But I also thought, what are my credit cards do I want to know that are 0%? So that if I do lose my job, if my husband's deli, you know, if people stop coming in, like what can we do in addition? So if you ever want to take me aside, I'll teach you a little bit more about 0% credit cards because yes, if there's an option, 0% credit cards or 0% financing on a car, are always great options, you know, because if you do the math and find out how much interest you're actually paying for your car loan, you'll be shocked. You'll be shocked depending on what it is.
Yeah.
So,
Yeah.
but those are the basics that we all need to talk about.
Yeah.
And it's not basic. It's don't feel like these aren't basics, but they do need to be discussed.
Yeah.
Because people don't understand that value.
Right.
You can start making money if you're not paying interest. And that's how real wealth happens.
Yeah.
So
Wow.
was that a good line?
Yes, write it down.
Yes. We'll
Yeah.
quote you.
In my world, it's the same. The basics are not basic to anybody. You know, insurance is daunting. It's legal contracts, it's acronyms, HO3, HO5, you know, it's all these acts of God, words thrown around like, you know, earthquakes, floods, and sonic booms, and you know, these are perils that we throw around lightly and casually, but you know, they say on the ads that you only buy what you need. Well, how do you know what you need? So you feel kind of empty and confused, really, and I think that impacts how women and all people approach insurance, and you know, they just don't understand the basics. We're not taught it in the you know, late years of high school, or even you know, basic college first courses or anything like that. But and that's why you need someone to walk you through it when you buy your first house or when you rent your first apartment. You know, people don't know they need a renter's policy to protect and people don't know that a renter's policy or a homeowner's policy or a condo policy consists of two sections. The first section is for property damage, for your own property, first party property damage on your contents or the house, or the things that could happen to it from, you know, external forces. And then the second section is liability insurance, which protects you, the resident of the apartment or the homeowner, from allegations and lawsuits from third parties. That, you know, somebody says you caused property damage to their apartment building, and your renter's policy is going to defend you and pay for the repairs to that apartment building that you caused. And a lot of people don't know that their personal insurance policy contains those kinds of important coverages to protect them from being underinsured when they have a situation that they find themselves
in. You guys get insurance is the one that still drives me crazy, like after all of these years. How come no matter what policy I've ever gotten, what deductible, what limits, what coverage, I feel like every time I have to use it, which is rare, like I've only had to use it a handful of times.
Yeah.
And they've taken my premiums, and everything's been hunky-dory until I have to use it. And then every time you have to use an insurance policy, it feels like, oh, sorry, now you're really gonna pay. Like you cover it, but then they're gonna jack up your rates and your premiums. Like, is that an industry thing? Am I always being told to pick the wrong product? But like, it feels like it's a no-win situation. Is anybody else?
Or they
feel
find a
this too?
technicality so that they don't have to cover.
Yeah, so
the
they don't
claim.
have to cover it. Yeah. So is it, because they can't tell you what's covered. Yes. You guys are seeing this too, so it's not just me.
No, it's not just you. I wonder what your thoughts are, and this might address this with umbrella policy. But yeah, maybe.
So insurance does have a bad reputation for all these reasons that you guys are bringing up. It's so complicated, and policies are re-underwritten every single year, and there's all kinds of underwriting information that goes into the formula for whether or not they're willing to offer a renewal or whether they'll take you as new business. And it has to do, definitely does, with loss experience. And are you turning in frequent small losses or that would indicate that, you know, there's a problem, say, with a leaky toilet, or, you
So
know,
is auto different? So if you're doing auto losses compared to home losses?
Yeah.
Like, so are they looking at it from a global perspective, or are they,
Well, they're looking-
if you're, because usually you're not always insured by the same company, but. you are, is it global? Is it better to be insured by two different companies?
No, not necessarily.
Use your rates, and then monthly rates are gonna be probably cheaper if you're with the same company.
Yeah, I think it is more economical to have all of your, as many of your coverages with the same company as you can. Because they do look at you as a whole, and if your auto insurance, if your auto claims activity has been clean, but you've had a couple issues on the home, you know, they'll look at it as and they won't non-renew, you know, the whole account, or maybe just they'll give you the benefit of the doubt. But I don't know. I'm sorry to hear you say you've had trouble. I don't know if you've had an agent working with you, or if you're going right through to the company and they're.
No, I have an agent.
Yeah.
It just seems like on all insurance that I've ever had in my whole life, like you can be the best driver in the world and then you get in an accident one time, right? One time, like that's gonna happen. And then all of a sudden, sorry, now your premiums are going up. And it's like, but you took my money all of these years.
Yeah, no.
And I was a great driver.
Well, 12 boys though.
Oh, no. I mean, or like we never used my full motors policy and we had a water issue and then we had to use it. Like,
Yeah.
and there's always
But
this
it does-
balance between like,
it's gonna
do I
hit you.
pay it so it doesn't go on insurance? It's like, but I pay for a product every month that's supposed to cover
Yeah,
me. And
well,
I'm totally taking us off track here.
No, it's okay. It's
No,
I think it's
I think people
conversation.
don't know.
Yeah,
So
so
it's,
you should discuss it with your agent every time you have an incident. Obviously, if you're in a bad car accident, and your car's totaled, and there's bodily injury, and people are hurt and everything, there's no question about that. But if you do have a fender bender, and you have had a couple of other incidents on your record in the last 2 years, say, you want to discuss the wisdom of turning that claim in, because it is likely going to impact your rates. And the insurance companies are looking back now longer and longer and counting more and more years experience as they re-underwrite it. So
I think we need an insurance industry whistle.
yeah.
If there's something going on.
And also,
oh, an umbrella.
So go ahead.
oh, you should only speak to this more, but I wasn't gonna say the umbrella, you should speak to umbrella, but also based on what you're saying, like all of this stuff, just like your finances, like even if you haven't had any problems, you really like your agent, every maybe, I don't know how many, 3 or 5 years, you should just be like, hey, go out there and just compare and look around, truly. And it does suck, and I mean, like, I know enough to know that when we like changed ours over, like I talked to the agent and I was like, if this happens, like I ran all these scenarios by them, like I was like, I want to make sure we get like all these things. That's because I do this, and so yeah, you don't know what you don't know, and this goes back to relationship, and like you can ping that person with those questions, and you know the trade-off is like you're going to pay for it. But yeah, be mindful of that, and yeah, I don't usually speak to umbrella, but.
Well, I was just saying, being an old merchant services rep, look at your contracts. You don't always have to make the change. Just bid things out. Say, look, this umbrella is only $1 million in my pool. Can we do something and bid it out? And I think I'm guilty of that too. But I think it's also back to investments. I went for years without really looking at my portfolio. You just gotta just little steps of just looking at it and saying, okay, am I in the right? Is this and just talking to a new insurance provider and saying, hey, can you just do this? It doesn't always take that much work. Sometimes it can just be an email back to your current person and say, hey, can you fix this? So I know it's so much fun. But I have some things on my list too. So
So umbrella policies, you guys may have heard of them. They are designed for excess liability coverage of either a family or a business, certainly. And there's the primary policy includes liability insurance, usually up to $500,000, like an auto policy, personal auto policy with $500,000 in bodily injury coverage and property damage coverage, which means that if you are in an accident and you're the cause of it and the people in the other car are injured, Your policy pays for them, their medical expenses, and if they should sue you, defends you against them. It also, your policy pays to repair their vehicle. Okay, that's the primary liability, auto liability. And same in a home, you're gonna have 500,000 or 300,000 or something, primary liability in the homeowner's policy, which defends you from if somebody gets, you serve them, they get sick and they have to go to the hospital, or if they get drunk and they go out and kill people on the road and they come back and sue you. Or if your dog bites someone or knocks somebody over and the lady has to go to the hospital and she's got permanent damage to your homeowner's policy, has 500,000 in primary liability. And that protects you from having to come out of pocket to take care of their medical expenses and pay their lawyer or pay your lawyer to defend against the lawsuit they brought against you. But then that you could quickly run out of coverage. Imagine if 3 people are injured in the car and you cause the accident and they all have to go to the hospital and have emergencies or get air medevac or what have you. That 500,000 is gone fast. So we recommend, and these guys will too, that their assets are protected by these policies called excess umbrella policies that provide additional liability coverage over the cars and the homes and the boats and the business, in case you run out of that liability coverage in the first policies. And we recommend for our families that the amount of liability coverage in an umbrella that you should have to protect your assets is kind of equivalent to your net worth, or it depends on what kind of exposures you have underlying. Do you have lots of young drivers? Are you a public persona, somebody who's out in the media a lot, their name, and so you hit someone and they're like, oh, well, that's just struck a jackpot here because I got hit by, yes. The coverage is inexpensive.
Yeah, that's what I'm gonna say. If you didn't hear that, that's also right. It's really not expensive to add those on to just give you that extra comfort level. The other thing I was gonna say, so I do, like I said, the people insurance. If you didn't know what that meant, like disability, life insurance, long-term care. They're not the same. And so I also think because people have had these experiences with auto and home, they're sometimes very untrustworthy of life, disability, and long-term care things. Like, it's not going to pay, it's not going to whatever. And there's crazy things that can happen. And if you have a good relationship, it's just a really bad look. it's not as common as like there's a lot more that goes into that. But I get that. I bring that up because I get that question a lot. I do life insurance people, they're like, well, will this only pay for a certain day? And it's like, you're getting just true life insurance? No, like you know that it's not a certain thing. That double negative didn't work. If you just die, it pays out. It doesn't matter how you die. And then disability insurance, there's things you need to look for, but a very stringent, tense disability policy, just if you can't do what you were doing yesterday, it'll pay out. And then long-term care, again, there's other caveats both those to look into, but if you have a true stringent long-term care policy, if you were not able to do some activities due to living as the measurement they give, it will pay out. Again, there's more nuances to those two, because they're more likely to happen. I mean, everyone's gonna die, but it's just different. And
this was a turn.
It's just different. But they just how they look at you and report. There's just a different kind of feel. But I think that sometimes people can conflate the two, and they get weary and sometimes want to go uninsured for those things too. And it's like, no, you need to protect all this stuff.
Yeah. And I think that goes back to we don't always know the right questions to ask.
Yeah.
And that can be overwhelming too, going in, even if you have an advisor, it's like, well, I'm here, but now what?
Yeah. And
what are like some common questions, or what are some advice that you would each give a first-time client coming in, whatever stage of life they are, whether it's someone who just graduated, got an apartment, gets insurance, someone maybe who all their kids have moved out. Do you need to switch up your insurance or your finances, or what's some common questions and advice that you would give? And then we're going to hop into some questions from you guys too.
It's funny, when you're buying a house, you usually like pull together all your finances anyway. So a lot of people come to me and they're like, I don't know my net worth. And it's like, okay, but if you were about to buy a house, you would be pulling that ish together real quick. And so usually when I have that, I already have kind of a rough idea of if something were to happen, what financially could they do? So then I just ask them conversations, like you get to just like the emotional part of it, like, and the kind of questions I'll ask you. Okay, if you do rent an apartment, if something were to happen to you, you could not go to work, would you go home? Do you have anywhere where you could go? Would you have to stay in that apartment? You own a house, well now that's a bill definitely not going away. Like, are you gonna be able to pay that? The long-term care piece comes in no matter what age you're in, either you might need it, and I kind of ask, again, something were to happen to you, who would take care of you? Like, do you have all these other people? On the flip side, I'll ask sometimes younger people, do you have someone in your life where like a parent or something happened to them, they would come with you? So I guess those just emotional things, just if you think about it. And work benefits. So I also asked them to bring in, I'm like, you probably got a huge PDF or a huge package, bring that in. And I just kind of go through it, and I go through it with them. And, sometimes I'm going through it and I'm like, okay, this is what this means. Like, how does that sound? And like, we actually crunched the numbers. I'm like, it says it's going to give you 60% of pay, but they are covering it. So that means actually be taxable. So maybe it's really going to be 40 to 30% of pay. You just told me you need this much. This is that dollar amount. How's that feel? Like, I just go through it with them. But honestly, sometimes we do it, and I'll even say like, so I think you're good. Like, this still is a significant gap as far as what would come in versus what you need. But sometimes I'm like, there's a little bit of an issue here. And sometimes it's, you're good now, but if you keep having raises and bonuses at the level you are, at some point we might need to revisit this. And so to summarize, you don't have to come in and say, do I need long-term disability? But hopefully an advisor will talk to you about that emotional piece of like, what would happen? How does that look? And then my role is to then fill that in with, well, here's how you would handle it. Here's how you would get through that situation.
It's really the breadwinner who's going to be paying the mortgage. And so it is very important. And I guess from my perspective, since I typically deal with businesses, but I would say from just a personal financials, I talk about all the time. I always think maybe people think, oh my gosh, she must be like really poor or something's happening, because like, it's so important to me to be able to make, a good decision regarding my personal financials. And I don't know if it's just security or what, but I see so many people just spending too much money, and
that's why I have a job.
And then they start having kids, and it just gets out of control. And I think going back to what I said earlier, it's just knowing what you're paying for interest, because then you can really buy the things that you want if you're not paying interest. And I think saving is so important. Obviously, your 401k is very important, but I think also saving for that new couch, and just those little tiny things really add up so that you can invest money and actually make money. And I just think our culture is so far from that. All the things on Overstock or Amazon, it's like, oh, well, this sweater it's really $25 a month. Well, it's layaway. You're paying a lot more money. You're like, if you can't buy that now, then you shouldn't. I think that there's necessities, obviously, but I think, and car payments, really understanding if the car is $70,000, really understanding what that means to your personal financial. If I could go back the first time I was at a car dealer and I signed for a 6% auto loan, I could go back and say, sure, I can make that monthly payment. That sounds great. But going back and understanding how much I actually spent at the end of the day, I just, it's just crazy. So I think,
And then they hit you with the personal property tax.
yeah.
And I did not know that was a thing.
Right.
Learned a lot.
Right. It is dark.
Where are my parents?
And from a business perspective, always line your financials up so that you can get to a line of credit. You don't have to use it, but just always say that's my business goal, is to be able to get a line of credit in place and have an actual relationship with me.
life that a person is in. But for the younger people, we have so many, my clients, kids, where it seems like we issue a renter's policy once a day these days. They're all over the place, and it's so fun keeping up with them and getting their cars transferred. You know, because when you move to LA and you get your renter's policy, and then you bring your car out, you're gonna get California auto insurance pretty quick right after that. Same with Colorado, and so you know, I spend a lot of time with these young people, helping them understand what they should expect. And then similarly, when they buy their first house, I help them understand and coach them on the construct of a homeowner's policy and what's in it and how it's built, and that we spend a lot of time talking to people of all ages about the difference between how a homeowner's policy insures the replacement cost, the rebuilding costs of the house, not the market value. The insurance company doesn't care what your house is worth. You know, if you were to sell it, they want to know, and you want them to understand what your house is actually made of. Is it one of these gorgeous 1902, you know, solid brick homes here in St. Louis? Because those are more expensive to renovate and repair after a loss than, you know, a frame house in a subdivision in St. Peter's. So that's something that it's really, I feel like we need to make sure our clients, new and old, understand replacement cost versus market value for loss settlement. People in their you know, middle ages, that's when the young drivers come along, and boy, oh boy, I have to spend time, you know, coaching them on what to expect. And you know, to talk about there's good student credits and driver training credits, and there's a way at school without a car credits, and we understand where the student is, and we do coach people and families on if they get speeding tickets, because we live in a state where we take care of those. I encourage people to do that, because a speeding ticket on a 16-year-old, big problem, big problem. We've dealt with some older drivers too, who I have, you know, they need doctor's approvals for us to be able to place, you know, decent insurance for them, decent priced insurance. So it's the gamut. You know, everybody's different. It's a lot of fun.
I know. I thought of one more thing, sorry, and then we'll go back to happier stuff. But one more thing I think is also overlooked. We all know that you're legally an adult at 18, but you're not like really an adult at 18. So if you have any older kids, I would encourage you to get a healthcare directive signed for them. And what that means is then you would be able to get medical information for them if they were incapacitated. Right now, if they got in a car accident and they're 18 in the state of Missouri, and you call the hospital, they're 18, the hospital doesn't legally have to give you information on their status and what they're doing. So if you get that directive on file, then you can get that information and all that. And then obviously take it off.
Yeah. Is that for an attorney? Is that where you go?
There's like, yeah,
Emily Kirk Estate Planning, she does them all the time.
oh, nice.
Okay.
Yeah, it's a very
Yeah,
page
yeah.
job thing to do. So
Yeah.
I would encourage you to do that. Yeah.
One other thing is too, is just know your overhead personally or from a business perspective. It's a lot less scary to handle a pandemic if you know that. Because I think you just, it's you know what you already, and if you know that, you probably already planned for what if. So make the joke, well, what if another pandemic happens? Well, that a pandemic actually happened. So if you felt that you were prepared or not prepared, something's gonna happen in another 10 years, just like 2008. So prepare yourself for it.
That happens to me occasionally. People say, should I buy insurance? We just had a global pandemic. There's such
coming.
Yeah.
Who knows what's next? So yeah. Well, thank you all three for being here. This was an amazing panel and a great way to kick off Financial Wellness Month.